Alright, what's up everyone? Welcome to another video. Once again, this is Daniel here. We need to give a quick update on gold. Now you can see gold futures chart on the screen, and we recently broke out of that downtrend, had a nice bounce on gold futures. These are the weekly candles here. And if you were paying attention to my channel right around here on this week, man, I called to go long on gold, made it real easy for you guys. There have been some really good gains since that video. I've been posting updates throughout this gold rally to keep everyone updated here, and we are at a legitimate support here, so we got to see what's going on with gold. There's that critical resistance line there that we need to get over, so let's check out what's going on. We have the Bank of Japan's decision we need to talk about that's affecting gold and the dollar, and then we have Jerome Powell's interest rate decision that we need to go over to know the whole story on gold. So let's jump right into that right away. But stay tuned to the end of the video because I will be giving some good trade ideas, at least some explanations on if you're bullish on gold, what to buy, and if you're bearish, I got some really good ticker symbols to look after. So stay tuned till the end, but let's check out the charts and see what's going on. All right, now here's gold on the 4-hour candles. It's the same picture we just saw on the weekly candles. And when we zoom in a little closer to the current price action, you can see all the technical levels we're watching. We need to go over these quickly because these are the levels to watch. If you're looking for reversals or breakouts, if you're a technical trader, these levels are golden. They've been working really well for me. You can see the price pivoting at these levels here. First things first, gold is at a crucial resistance level as we speak. That's going to be the 1830 price point. We need to get above that for this bullishness to continue. The next major resistance level on the way up is the 1870 price point here. That's if we do get to blast off that high. We do have somewhat of a weaker support, or I should say resistance level here. It's a shorter term resistance level. That one's a little weaker. That's why I made it the gray line, so it stands out differently from the yellow. And that one is right around the 1850 price point. Remember, that's a weaker resistance level, so don't expect too much strength off that one. But sometimes you get reversals there. Some more weak support zones around the 1791 price point and the 1780 price point. You might find some support at those softer gray levels that I highlighted, but the next stronger support zone, the really strong one beneath where we're at now, would be right here at the 1752 price point. Those are the main levels to watch here. Now, whether gold travels up or if it comes down, that all depends on the macro environment, the dollar, what's going on in Japan, and the Fed. So let's talk about that. Now, when we're talking about gold, the first and most important thing we need to talk about is the US dollar. This chart is the US dollar index, and what you need to know is the inverse correlation between gold and the dollar. Because the dollar and gold is traded as a currency pair on the Forex markets, when the US dollar is going up in Forex markets, then that gives the dollar strength and that weakens gold's value. So when you see the dollar going up, you got to expect gold to be coming down in one way, shape, or form, guys. And as you can see by this chart in the dollar, we had a big gap down, and we are still trending down within this channel. So this is what's really helping gold's value increase, all right? And as I already mentioned in previous videos, when the dollar had this big gap down and started its downtrend, basically ending the year-long rally, that's when gold started its uptrend. So we'll see how long gold can go, right? So let's check out the other factor that's affecting gold, especially the Fed right now. All right, here is the chart of the 10-year Treasury yields. And you can see how they've basically been on a rally for several months long. The Federal Reserve has been hiking interest rates during this time. It's essentially been pushing up the 10-year yield with its interest rate hikes. And this has been fueling the dollar's strength. People are piling into the dollar while we're increasing these interest rates. So the Fed's pushing up interest rates, pushing up the dollar, and that's bringing down gold. And I should even point out that all of these downticks in the 10-year yield, these corresponded with downward pressure on the dollar, which gave upward pressure on gold. It's very interesting. And if you look where we are right now, gold's been rallying over the past couple weeks, several weeks, while the 10-year yield is falling with the dollar. It's very convenient, right? So let's actually zoom into this area and see what the Fed's got going on with the 10-year yield. Here's that area where the 10-year yield was dropping, bringing downward pressure on the dollar and lifting gold's value, right? All of this was happening when the market was assuming the Fed's slowing interest rates, which they are, but they were also assuming a pivot was coming near. But right around here, the Fed interest rate meeting, the Fed hinted towards higher rates for longer, right? So we got pressure on, or upward pressure on the 10-year yield. And you would think this would bring up the dollar like it has been in the past. It has not brought up the dollar like you see here. This looks like it's starting to break out to the upside. The dollar has not done that yet. So gold is still showing some upward strength because the dollar's not pushing upward. But Jerome Powell did hint towards higher rates for longer, so we got to pay very close attention to where these yields, if they break out with a lot of momentum to the upside, then we might see the dollar climbing greatly and gold falling. We got to watch for that, so definitely watch the yields and the dollar. And the last thing we need to go over is the Bank of Japan's policy decision. This chart is the 10-year Treasury yield for Japan. Now, I've talked about this in several videos. The Japanese government has been pegging bond yields here. They've been buying bonds to keep yields below this 25 bips or 25 basis point level here. They recently changed their policy decision, and look, man, the yields started skyrocketing, and they're even skyrocketing today. We got a fat green candle going already. Now, this rise in the 10-year yield in Japan is affecting global yields. It's actually pushing up global yields, and you would think that that should push up the dollar as well, but it's not pushing up the dollar like you would think, as our 10-year yield is increasing with Japanese yields, because their yen's increasing because of this policy decision, and their yen's increasing in a big way. Let me show you. Now, here's the chart for Japanese yen futures, and as you can see, they ended that downtrend. They've been climbing as the dollar's been dropping, and coincidentally at the same time as gold climbing, right? And look, after that Bank of Japan decision, I've been talking about this in my videos, huge climb in the yen. I actually mentioned you should be buying yen futures or some ticker symbols that follow yen futures. And those are the ticker symbols FXY and YCL. Of course, I didn't mention you should be buying them because I'm not a financial advisor, right? I'm just telling you what I'm doing, and I'm definitely holding these. I actually added to my position. YCL is a leveraged ETF, so watch out for that. But anyway, back to the point, the Bank of Japan's decision sent the yen skyrocketing, and you know, in the forex markets, when other currencies are showing strength, that might bring the dollar down or give some weakness to the dollar strength, right? And that's exactly what happened yesterday. The dollar started coming down in a hard way, and gold took a nice leg up with the yen. It kind of had a big green candle like this. Not quite this good, but it looked good for gold. So this Bank of Japan decision should, so far it looks like the reaction in the markets is showing that gold is liking this Bank of Japan decision, so you definitely gotta keep an eye on the yen. If that keeps bringing down the dollar, then, you know, gold's gonna go up. Remember that inverse relationship. And I mean, check it out for the best performing industries for the day. We had oil and gas up there with gold and silver, of course. They performed super well off that Bank of Japan decision. And of course, if it's one of the best moving industries or concepts, then you'll see it all over the top performing ETFs. We got the Sprott Silver Trust. We got two silver trusts right on top. All the precious metals, silver miners, platinum miners. We got a gold miners trust down here. I mean, basically gold like that Japanese or Bank of Japan decision, so I'm still bullish on gold. A lot of other people think there's a bearish case on gold because of this. I haven't seen it yet. So keep eyes on those technical levels I mentioned. That's where you're going to find the reversals if the market does decide this is a bearish case for gold. Am I right? So keep eyes on the technical levels and keep eyes on the Fed, the yen, everything, right? All right, guys. Now, of course, before we get to the end of the video, I got to give you a few good trade ideas. Now, I'm not a financial advisor, so I can't tell you what to buy, but if you do believe in gold and silver and how precious metals are on a rally right now, then there are a few ticker symbols you want to watch. I've already highlighted a few on the chart. My favorite, there's one of them there, SLV. That one tracks silver price pretty much. It almost follows silver futures prices to a T. GLD follows gold futures prices, almost follows it tick by tick. If you like to invest in the gold miners, you have GDX. That's ticker GDX follows gold miners. Basically, it's got a basket of gold miners within its portfolio, I guess you should say. And GDXJ is the other major ticker symbol that I like to trade. That one is the junior gold miners. Basically, that follows all the small cap gold mining companies. Now, you could always go into these and find a specific gold miner or some sort of gold company, gold commodity related company, and you could always pick an individual miner. You might be more successful that way, but if you don't want to do all that work and you just want to track gold's price, then you got to pick up one of these ticker symbols here. And that's all I've got for this update on gold, guys. I appreciate for watching the whole video. If you did, I greatly appreciate it. Go ahead and hit the like, subscribe, leave some comments, all that good stuff, and I'll see y'all on the next gold update.